And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Monday, June 14th, 2021. Market again starts off in the best attempt to get itself down to put in some new lows to complete this small wave two. And again, the market pretty much failed, but came down in 5 and came down pretty sharply. And that was after getting up to 42.48 in the Globex session. So it came plowing back down. It got down to 24.50, I believe it is. Yeah, 24.50, and then launched once again. Now that most of that launch came right during the last hour, where again the market went up to 48.50. Beautiful, beautiful, beautiful move. But back to some analysis. Sorry. I am now considering that this is 1, this is 2, and we're in sub. So there's subs. The degree level is very, very granular at the moment. And the reason being is that we're really moving up into uncharted territory when we start getting up here. And now that we're getting up here, we have to rely on our Fibonacci relationships of waves and the fact that, yes, we must still leave open the possibility that the market could come down, but that would make that particular corrective phase much, much bigger than in time, which is totally acceptable, to be honest, than, of course, the first wave took to get up to its high, which basically was 2 hours. So 2 hours versus now 2.5 days. So I'm going to consider this a failure and that we are now launching in sub third wave up. And that's going to be a part. So it's going to really be wave 3 of wave 3, which started here. So it's a 3 of 3 move. And that launch, again, puts a lot of support behind it. So again, just trying to relate the characteristics of the move, the territory that it covered, the nature of the type of move we'd be looking for to do this. So when I put that all together, I start to really feel that this is now breaking into the third of the third. So we've subdivided far enough where we're finally now getting that push, the middle of this little bit larger wave 3 that we're looking at. So 1, 2, and this is the start of the third. Now, where can the third go? I'm going to bring this down so that we can see inside and pull it down this way. So these numbers become a little bit more clear. So if indeed this is going to follow more of a path similar to what I've now seen in the NASDAQ, which, by the way, the S&P was down most of the day while the NASDAQ remained higher and continued to build on that rally. So the fact that these markets did start to begin to uncouple was primarily because of Apple. Apple has a much higher weighting in the NASDAQ than it does in the S&P. So, and it's also in competition with 499 other stocks. So that pulled the NASDAQ higher, but kept a cap on the S&P until the end of the day, when Apple just really kind of caught fire and jumped $1, and that was enough. Boom, off we went to the races because the lid kind of came off of everything as buyers returned across the board. Now, so again, 1, 2, ends in a failure, and the failure got bigger. This is 42.24, and what I wanted to see it take out was 42.07, or no, excuse me, 42.18, and not drop below 42.07. But I was looking for it to take out 42.18 before we launched. So again, not a tremendous, huge amount of a failure, but a failure. But I like what it did coming out of it, so I'm going to stick with it. Where do we go from here? I think that until this whole thing is now complete, I got 1, 2, and this, and now I'm looking for 3, and maybe this is 1 of 3, and now we're in 2 of 3, and we're going to get a 3 of 3 of 3 move. We could be looking up here we could be looking at here, because it's at this level where wave 3 would be equal to wave 1. And that, I'm afraid, should be closer up here. And if it follows along the same path as what the NASDAQ has just amounted to do, we did a really nice rally, we pulled back, and then someone had to light fire under that NASDAQ, and it happened today, and that market slipped through all of this block window of resistance that the S&P now confronts and got itself closer to that 100% level. S&P can play catch up, and that may just push it straight through 57. From current levels, we're talking about 15 bucks. And that would also likely suggest that the balance, because of this, the companies are spread out across all 4 indexes, not all the same, but things in the Russell are in the NASDAQ. The NASDAQ's in the S&P. The S&P, of course, is all encompassing and has also Dow components, and vice versa. The Dow has Apple, the Dow has Microsoft, the Dow has Intel, so it has some of the NASDAQ, et cetera, et cetera. So there's a cross-pollination between all the 4 major indexes that are traded, let's say. Okay, so downside evolution will continue to be limited until we get through this 3rd wave. And if indeed we're about to enter into a 3 of 3 move type move, this should be pretty explosive to the upside. And it may start to pause at these levels, but again, shallow, move up, until we can count 5 up from here. And that would be, and how far this first wave got was 24 points. So if wave 3, we're talking 24 points, you're up to 64. So we're already up into there. And that would just be 3 and then a 4 and a 5. So ultimately, we again continue to look for 4,300 in that area. Once we start to break above here, that I believe then completes up in here maybe wave 3 from here. Wave 3 of 3, get a 4 and then a 5. And I think that's really starting to point here. But again, we'll be able to fine tune it and put additional Fibonacci around it. I mean, I've got this Fibonacci extension. I can do one more if indeed that is the top of wave 1. I can throw retracements in, but the next one that I would put up is that if this is going to be a 3 of 3 and it's going to be related to 1 of 3, then you can run that. But then I have to wait for this low and I have to wait for it to break above there before you can put that additional extension on. And then that should start pairing up somewhere in here. And that's how you start to fine tune, and get more and more granular. This is the type of talk that takes place in the trade room, folks. So, and again, just to remind everybody that I am intending to open the new Logical Signals trade room on the 21st of June. So if you're on my mailing list, that's great. Even if you subscribe to this particular channel, that's great, because you will get the promotional email, and that will include also the promotional pricing and the setup and the links. So everything will be taken care of. If you have an interest in joining the trade room, these are the type of discussions, and this is what I'll be going over almost on a daily basis. So again, for tomorrow, I am looking for shallower pullbacks and continued upside. The type of move that I believe we're in does suggest that we should have another thrust higher. Again, let's not forget that we've got a quadruple witching hour coming up on Friday, and we're also involved in rotation for the end of the second quarter. So all things considered, we cannot start to reason why we're now pushing to new all-time highs. Just accept that it's happening and go along for the ride. Next update will be tomorrow, June 15th.